Hi everyone, welcome to JD's Guidance once again. Friends, I am with you for today's discussion on technical analysis. In the previous video, we have seen that any investor is interested to know the performance of the security in future. And in order to anticipate how would be the performance of the security, he is actually doing a kind of analysis. And there are two sets of analysis which is very popular. One is the fundamental analysis and the other is the technical analysis. We have seen about fundamental analysis in our last video. Friends, let's check this concept of technical analysis in this video. So friends, technical analysis is based on a very fundamental belief that when we are trying to study the prices of the securities over the past many years, it will give us a kind of trend. In other words, if we take the closing price data of the security of some years which are before the present time and we try to find out what this data has to speak to us, that will give you some kind of information to you. So all that I want to say is that suppose you are standing at this point 0 and you want to know what is going to happen in +1, +2 and +3 time period. So the technical analysts, they believe that you can get an idea from -1, -2, -3 time period because they believe that the data has a tendency to repeat their trend. Whatever they have exhibited in the past, there is a chance that the same can repeat in the future also. So having given this analysis, an investor can easily predict how this particular security is going to perform in the future in terms of its price appreciation or dividend, whatever. So now friends, what the technical analysts are doing is actually trying to find out a trend analysis. They are trying to make a trend, trying to find out how this trend of the security is given the information from the past many time period. Based on this trend, they can anticipate how this trend can be in the future. So that's why the technical analysts take use of different types of charts. And that is why technical analysis is also known as chart analysis. So in this video, we will see some of the charts that technical analysts they generally refer to if they have to predict the future trend. Now let's first find out that the chart analysis can be a simple line chart, okay. Now, or it can be some other modified or advanced charts, and let's see what are those advanced charts in this video. Right friends, so let's move on, and I would like to first tell you what is this simple line chart. Simple line chart is actually whenever we are trying to predict the future, we are taking a clue from the past, and what we are taking, what set of data we are taking is the closing price data. So closing price of the security. So we can plot it in the OY axis, okay, ranging from 0, 1 to whatever is the denomination, and here is the days or here it is the time period, okay. Now if we make a simple line chart, we are trying to find out in day 1 what was the closing price, in day 2 what was the closing price, in day 3 what was the closing price, day 4 what was the closing price. This way we are trying to match the day with the closing price, okay. So say 100, 200, 300, 400, 500, and likewise I take second day, third day, fourth day, fifth day, sixth day, and I then plot this data on this curve and then graph, and then we just make a line like this. This is your simple line chart, and what it is saying? It is saying that there is a kind of trend that we can see in the past. What is the trend? If I can see from this rough, my hypothetical data set, you can see the trend says that in the initial time there is a chance of peakedness, means the performance will be high, the closing price will rise, followed by a sharp decline, and then there is a consistent trend upward. Right? So this type of analysis we can do, and then we can predict the future is likely to go like this. So this is how we are making use of the simple line chart, right? Now let's take help of the other advanced charts that we have in the literature from time to time. Now simple line chart is not very popular. People generally refer to the bar charts and candlestick charts in order to have a very clear view of how the stock performance is in terms of its prices. Now friends, when I say stock price, we are generally interested as an investor to see four types of prices. The first is the opening price, second is the closing price. We want to know the high price and the low price. That means we can say highest and lowest of the day. So when we are talking about a trading day or we are talking about a particular day, we are likely to see what is the price at which it has opened. When the market opened, what was the price? So we call it opening price. When the market closed, what was the price? We call it closing price. During the day, what was the highest that the price had gone and what was the lowest that the price has fallen. So these are the four things that we are more interested to know about a particular stock price. Now we can take help of bar charts, and let's see how these bar charts can help us. Now when I say bar charts, it will be looking like a bar, and here we have some kind of say price. It can be opening, closing, highest, lowest, and these are the days. Now suppose I want to plot the price, that is all the four price in day 1. Okay, so what we can do is that suppose it is 100, this is hypothetical, 200, 300 and 400. So we can have, suppose the price, the opening price was say 360, the closing price was 390, and say this is maybe in any denomination, let's suppose it is rupees. The highest was 420 and the lowest was say 340. So this data is available in front of us. So what we can do is that we can first find out, this is about day 1 say. In day 1, what is the opening price? We have the opening price 360. What is the closing price? The closing price is 390. Okay. And what is this is opening, this is closing. Okay. And what is the highest price? 420. And what is the lowest price? 340. So what we can do, we can just draw a bar like this. Okay. I'm just sorry, I'll just take help of this again. I'm doing it again. We have some values like lowest is 340, the highest is 420, the opening was 360 and the closing was 390, right? And I draw a line like this. Now what I will do, we will first see this is highest, this is understood, this is lowest, this is understood. Now what was my opening? The opening price was 360. So for the opening I will do I will give a horizontal bar this side, and for the closing I will give a horizontal bar this side. So this gives an investor an idea that this stock in the day 1 had shown this much high and this much low. However, the opening price was 360 and the closing was 390, right? So opening, this is opening and this is closing. This way I can do for day 2, day 3, day 4. And how can it help me? It can help me see that what was because most of the investors are interested to know the closing price, whether the closing price is going high like this or not. Okay, so this way, or some people are interested to know the highest in a day. Okay, so this way this bar chart can help us plot the prices of the stock corresponding the days. Let's move on to the candlestick charts. So friends, let's talk about the candlestick chart. In order to know the candlestick chart, we also need this 4 information. Again, we need the 4 information. So first we will do what we will plot the highest and we will plot the lowest. Suppose this is our highest, this is our lowest, suppose hypothetically. And then in between these two we will have our opening and closing. Suppose this is my opening and this is my closing. So what I will do is that I will draw a candlestick in between them, and this chart is known as the candlestick chart. So friends, this chart shows that this was my highest, this was my lowest, this is my closing, and this is my opening. So this is a white candlestick chart, or we can just say it's a simple candlestick chart. Now in case your opening is, suppose this is your highest, this is your lowest, and in between your opening is higher and closing is lower. In such a case, okay, suppose this is your lowest. So in such a case, what will happen is, this shows that your opening was higher than the closing. We color it in black and we call it black candlestick. So whenever we have a black candlestick, it is indicative of the fact that your stock price had a higher opening price than the closing price. So the closing price was lower and the opening price was higher. But in case your opening and closing is same, opening price is equal to the closing price, you will have a straight line like this. This is highest and this is lowest, and somewhere there is opening price and closing price both are same. So it looks like a straight line. So friends, this concept has been developed in Japan, so we call it as a Japanese candlestick charts. So friends, that's all about how many types of charts we can have in order for our analysis. Now we are going to see how these charts can help us predict the trend.